Nobody tells you that banks have a caste system and that you've been living inside it the entire time without ever seeing the walls. The teller who makes you wait 40 minutes for a routine question isn't being lazy. The private banker who calls you personally to discuss a wire transfer isn't being generous. Both of them are following a script written by an algorithm that scored you the moment you opened your first account, and that score has been quietly determining how you get treated ever since. Here's what that treatment actually looks like, level by level, from nothing to 25 million. Level 1, $0 to $500, the waiting room. You walk into a branch on a Tuesday afternoon because your debit card got declined at a gas station and you need to know why. There are 4 tellers, 3 of them helping customers, one apparently on a break that started before you arrived and shows no sign of ending. You take a number. The little screen tells you there are 6 people ahead of you. You sit in a plastic chair bolted to the floor, next to a rack of pamphlets about credit-building products nobody in this room can currently qualify for, and you wait. When you finally get called, the teller, a woman named Denise, who's clearly been doing this a long time, explains in about 90 seconds that a return check triggered a hold and that you'll need to wait 3 more business days for it to clear. She's not rude. She's not particularly warm either. She's processing you the way she processes the next 40 people she'll see today, efficiently, without much room for anything beyond the transaction in front of her. You leave with your problem explained but not solved, because solving it isn't really her job. Her job is throughput. This is banking at the bottom of the pyramid, and it's not personal, even though it feels personal. At this level, you cost the bank money. The average checking account under $500 generates almost nothing in fee revenue once you account for FDIC insurance costs, fraud monitoring, and the physical overhead of maintaining a branch network. Banks tolerate these accounts because regulation and public relations require it, not because they're profitable. You are, in the language nobody says out loud, a cost center. Level 2, $1,000 to $5,000, the automated middle. A few years later, you've built up a small cushion, a few $1,000s sitting in savings after finally getting serious about an emergency fund. You call your bank about a fee you don't recognize on your statement, a $12 charge with a vague description. You get routed through an automated phone tree, press 4 options deep, and land on a representative in a call center who's polite, reads from a script, and resolves the issue within about 6 minutes. It's not a bad experience, it's just entirely impersonal, the customer service equivalent of a vending machine that happens to be staffed by a human being reading approved language off a screen. At this level, banks have started to notice you exist, but only in the aggregate. Your data feeds into models that decide what offers show up in your app, what interest rate you're quoted if you apply for a credit card, whether you get pre-approved for anything at all. You're not being ignored anymore, exactly. You're being processed by systems designed to extract maximum value from millions of accounts that look roughly like yours, optimized for scale rather than individual attention. Level 3, $10,000 to $50,000, the first real attention. Somewhere around $25,000 in combined balances, checking, savings, maybe a small CD you opened because a coworker mentioned the rate. Something shifts. You get a call, an actual human calling you directly, not a robocall, asking if you have 15 minutes to discuss your accounts. This is the first moment a bank has ever proactively reached out to you, rather than waiting for you to have a problem. The banker's name is Terrence, and he works at the branch you've been going to for years without ever really talking to anyone beyond a teller. He mentions, gently, that you might benefit from a high-yield savings option currently paying meaningfully more than your regular account, and asks if you've thought about opening a Roth IRA. None of this is life-changing advice. Most of it, you could have found with 20 minutes of research online. But the fact that someone reached out first, unprompted, registers as significant in a way that surprises you. This is the threshold where banks start to see you as a potential relationship instead of a transaction. You haven't crossed into private banking territory. You're not getting invited to anything, but you've moved from being invisible to being mildly interesting. A customer worth a phone call because the lifetime value calculation just barely tips in favor of spending 5 minutes of a banker's time on you. Level 4, $100,000 to $250,000, the relationship manager. Your accounts cross $150,000 combined, a mix of savings built over years and a small inheritance from a grandmother that landed unexpectedly. The bank assigns you something called a relationship manager, a title that sounds more significant than the actual service usually is, but the shift is still noticeable. You get a direct phone number instead of the general customer service line. You get invited to a branch for what's described as a portfolio review, which turns out to be a friendly hour-long conversation about your goals, retirement timeline, and risk tolerance, conducted by someone named Priscilla who actually seems to remember details from your last conversation instead of pulling up your file cold. The products being pitched changed too. Instead of generic savings accounts, you're now hearing about managed investment portfolios, estate planning basics, and occasionally a mortgage refinance opportunity tailored to your specific rate and timeline. None of this is exclusive or secretive. Anyone with enough money in an account gets roughly the same treatment. But it feels different from the inside, because for the first time, a bank employee's compensation is partly tied to how well they serve you specifically, rather than how many customers they can process in a day. Level 5. $500,000 to $1 million. The velvet rope appears. You cross $500,000 in investable assets, mostly through consistent saving, some market growth, and a home equity position that finally tips your net worth into genuinely substantial territory. The bank's tone shifts again, subtly but unmistakably. You're invited to something called a private client program. Not quite full private banking, but a tier above ordinary retail service. There's a dedicated phone line with almost no hold time. There's a banker named Augustin who calls you by name when you walk into the branch, who somehow always seems to be available when you need him, in a way that feels almost suspicious until you realize his entire book of clients is small enough that genuine availability is actually possible. Fees start disappearing without you asking. An overdraft that would have cost you $35 a few years earlier gets waived with a quick note in the system. Wire transfer fees vanish. Annual fees on premium credit cards get comped as a relationship perk. None of this is charity. The bank has run the math and determined that retaining a client at your balance level is worth more than the fee revenue those small charges would generate. So the fees simply stop being enforced, quietly, without ceremony. Level 6. $1 to $5 million. Private banking proper. You cross $1 million in investable assets, and the entire texture of your banking relationship changes in a way that's hard to overstate. You're moved into private banking, a genuinely different division of the institution with its own building entrance in some cases, its own dedicated staff, its own product menu that doesn't exist for retail customers at all. Your relationship manager, now someone named Fenwick, has a client list small enough that he knows your children's names, remembers you mentioned a kitchen renovation 6 months ago, and calls just to check in occasionally with no transaction attached at all. The actual services expand meaningfully here. You get access to specialized lending products, securities-based lines of credit that let you borrow against your portfolio without selling anything, structured in ways that retail customers never see offered. You get invited to events, not extravagant ones necessarily, but dinners and seminars where the bank connects you with estate attorneys, tax specialists, and other private clients, building a network around you that didn't exist at any lower level. The bank isn't just managing your money anymore, it's positioning itself as an integrated part of your financial life, present for tax planning conversations, trust structuring, and generational wealth transfer questions that simply weren't relevant when your balance was smaller. Level 7. $5 to $10 million. The team forms. Somewhere past $5 million, you stop having a single relationship manager and start having a team. Fenwick is still your primary contact, but now there's also a dedicated investment strategist who builds custom portfolio allocations instead of using off-the-shelf model portfolios, a trust and estate specialist who coordinates with your outside attorney, and someone whose entire job seems to be anticipating problems before you're aware they exist, calling proactively about a tax law change that might affect your holdings, or a market shift that warrants rebalancing your fixed income exposure. The bank starts treating your wealth as a system to be optimized rather than a balance to be serviced. Meetings happen quarterly instead of annually, thorough reviews that dig into asset allocation, tax loss harvesting opportunities, and multi-generational planning that assumes your wealth will outlive you and needs structuring accordingly. You're no longer being sold products in any traditional sense. You're being advised, in a genuinely consultative way, by people whose compensation is tied to your long-term satisfaction rather than any single transaction. Level 8. $10 to $25 million. The bank comes to you. Past $10 million, the relationship inverts almost entirely. You stop going to the bank. The bank comes to you. Meetings happen at your home or office if you prefer, scheduled around your calendar rather than the branch's hours. Fenwick's team now includes someone dedicated specifically to philanthropic planning, because at this level, charitable giving strategy, donor-advised funds, and foundation structuring become genuinely relevant parts of your financial picture, not afterthoughts. You get access to opportunities that never appear on any public product list, co-investment deals in private equity funds, allocations in IPOs before they're publicly available, real estate syndications reserved for clients above certain thresholds. None of this is advertised anywhere. It exists in a kind of parallel banking system that only becomes visible once you're inside it, communicated through direct conversations rather than any marketing material, because the bank has calculated, correctly, that clients at this level don't respond to brochures. They respond to relationships, discretion, and the sense that they're being handled by people who understand the actual complexity of what they're managing. Level 9, $25 million and beyond. The bank becomes invisible. At $25 million and beyond, something strange happens. The bank itself starts to recede into the background, not because service declines, but because the entire relationship becomes so customized that it stops resembling banking as most people understand it at all. Fenwick, or whoever occupies that role at this level, functions less like a banker and more like a chief financial officer for your entire life, coordinating between your accountant, your estate attorney, your investment managers, and increasingly, family members who need to be looped into decisions about trusts and succession planning. Fees, in the traditional sense, mostly stop existing as line items you'd recognize. Everything gets bundled into a relationship structure, negotiated individually, often below what a retail customer would pay proportionally for far less service. The bank isn't extracting value from you through fees anymore. It's extracting value through the prestige and stability of managing a client at this level, the kind of relationship that gets referenced quietly in recruiting materials for other high-net-worth prospects, even if your specific name never appears anywhere. What actually explains the levels? The mechanism underneath all of this isn't mysterious once you see it laid out level by level. Banks are, at their core, businesses that make money on the spread between what they pay you for deposits and what they earn lending that money out, plus fees for services rendered. A customer with $300 in a checking account generates almost no revenue and carries real regulatory and operational costs. A customer with $25 million generates enormous revenue through managed asset fees, lending relationships, and the kind of stability that lets a bank model predictable, low-risk income for decades. Every layer of service you receive, from the plastic chair in the waiting room to the private jet invitation for a client appreciation event, exists because someone calculated the expected lifetime value of a customer at that balance level and built a service model to match it. Nothing about it is personal, even the parts that feel deeply personal, the banker who remembers your kids' names, the relationship manager who calls just to check in. It's all downstream of a spreadsheet somewhere calculating exactly how much attention you're worth. What this means, if you're not there yet, understanding this system doesn't mean you should resent it, or expect it to change, or assume that banks are secretly villainous for operating this way. It's just how any business scales attention against value, the same logic that determines why a $50 customer at a restaurant gets different treatment than someone who spends $500, or why airlines have entire tiers of boarding groups built around loyalty status. What it does mean is that you can navigate the system more intelligently once you understand its actual mechanics, instead of assuming your treatment reflects something personal about your worth as a customer. If you're at level 1, the plastic chair and automated phone tree tier, the fastest way to level up isn't complaining about service. It's understanding that credit unions and smaller community banks often treat customers at low balances with genuinely more warmth than large national institutions, because their entire business model depends on relationship density rather than scale. If you're in the middle levels, the automated but not invisible range, the leverage you have is competition. Banks compete hardest for customers who are growing, not customers who've already arrived, so timing a move to a new institution during a period of visible financial growth often earns better treatment than staying loyal to an institution that's stopped noticing you. The quiet truth, nobody says out loud. Here's the part almost nobody says directly, even though everyone in banking understands it perfectly. The system isn't actually about wealth in some abstract philosophical sense. It's about predictability and cost. A stable customer with $25 million who rarely needs anything costs a bank almost nothing to retain, while generating enormous fee revenue through the sheer scale of assets under management. A customer with $300 who overdrafts twice a month and calls customer service 4 times a year costs the bank real money relative to the tiny revenue that account generates. The gap in treatment isn't a moral judgment about which customer matters more as a person. It's a cold calculation about which customer costs less to serve while generating more. That distinction matters because it means the system, however uncomfortable it feels to witness, isn't actually rigged against you succeeding within it. Every level described here started as a level 1 account at some point. The relationship manager named Fenwick, sitting across from a $25 million client today, spent his own early 20s in a checking account that probably looked a lot like yours. The system doesn't care where you started. It only cares where you currently sit, which means the entire structure, uncomfortable as it is, remains something you can climb through rather than something permanently sorting you into a category you can't escape. The plastic chair in the waiting room, the automated phone tree, the 6-person line for a teller, none of that is a life sentence. It's just level 1 of a game with a lot more levels above it, levels that become visible only once you've actually reached them, waiting quietly for anyone patient enough and consistent enough to eventually level up.